Doing any kind of stock market analysis requires an understanding of statistics. Whether you're trying to find simple mean averages for mean reverting strategies or you're trying to understand volatility of a certain stock, you would find yourself trying to understand basic maths and stat. So this video series is going to talk about statistics and financial metrics that are required for starting an analysis into market data. Now this is a very beginner friendly conversation, so I'm not getting deep into different statistical techniques or for that matter even the statistic itself or financial metrics. The idea is just to start simple, show how we can build simulation and then move progress further. So maybe let's choose. And the first thing I have here is simple import pandas. And the idea of importing pandas is just so that we are able to work with data frames. There's nothing else expected here. And I have not even fetched data from Yahoo Finance or anything like that. This is pure, just hard coding some price values. So there's a bunch of banking stocks. There's some prices for them. There's volume. Their revenues are captured. And then I'm getting the basic descriptive statistics. Descriptive statistics is just, some kind of high level output, 5-point statistics. So you'll get count, mean, min, 25, 50, 75 and the maximum value. And then you also get the standard deviation. So basically you can just print out these values, or you can just say dataframe.describe or df.describe. And essentially what this function does, we should actually look at the documentation for the function. df.describe, and this should give you the whole dispersion analysis, it just describes basically simple statistics and gives you the measure of central tendency, which is the dispersion and the shape of the data set. It will not include NaNs, so we have to work our way with that. So yeah, this is just a standard measure of central tendency. Now, why would you use that? This is very important to understand. So let's hop over to TradingView and see something interesting. So when you look at something like a State Bank of India ka 5-year data, you would see that the standard deviation is just moving a little here and there. At times it's very high, but then it's probably consistently in certain range as well. Now this is not directly tying to a trend. The intent here is not to show a trend or an upward or a downward movement. However, using a standard deviation, you can understand the volatility of the stock. So if the volatility is very high, you should expect it to come back to mean. Again, talking from a mean reverting approach. If it is very low, you can probably expect that the returns would be lower, right? So there are some measures of central tendency. Why they are called as central tendency? It's like given a shape of the data, given the fact that there's a lot of data points available, it just tells you how the data looks at it. There's no physical representation of it that I would like to suggest. It's just that you need to understand the fact that you're trying to represent for the whole data what best describes it, hence the central tendency and dispersion at the same time. Now dispersion is the spread of the data, which is the standard deviation tells you about variances. The central tendency is more about where things are likely to come back to. So for a stock price, it becomes the base price or cost that it can come back to for mean reverting approaches strategies, or even stocks that follow some sort of a mean reverting principle over a certain time period, of course. For dispersion methods, again, you can use it to calculate volatility. Financial ratios and matrices. So you have, there can be a lot of different financial ratios. I mean, for risks there are separate, for returns there are separate, but basically these are simple financial ratios. So there's just P ratio, price, revenue, ROE, ROCE, these kind of basic fundamental financial ratios. You could have simple things as percentage of sales or annual growth. And most of these financial ratios I would suggest to pick from screener.com. So when we go to, Screener, you would be able to pick anything like just select for any screen, pick any company, and you should be able to see all of these financial ratios like P, ROC, EPS, all of that. And using these financial ratios, you can either download the data from screener.in and just plug it into this for analysis, or you can just calculate it raw if you have the data, and at the same time approach it in similar fashion like we did above. Go for central tendency and go for dispersion method. So those are the two kinds of different analysis. Then you have correlation analysis and covariance analysis that we can look at. So you can build a correlation metric, you can build a covariance matrix. Both of these are used for understanding again dispersions along the data. Now, where would you use correlation and where you would use covariance? We'll talk about that in the next video. But a lot of times there's a notion that correlation is like this is happening, then this will happen. It should be very clearly understood that correlation does not imply cause, which means that a change in stock price A might not or might impact a stock price B. So there's not it's not a dependent relationships. It's just that they are numerically and statistic correlation. It doesn't translate to the cause of it. And then you get into covariance analysis, which is slightly more advanced, and we'll talk about all of that in the next video. So if you have liked this simple introduction into statistics, all I've just talked about is a bunch of small Python code, financial ratios, which are very, very simple, like basic financial ratios. These are not even detailed financial ratios for that matter. And then an introduction to correlation and covariance I intend to talk about later, because I think it will require a little more time. So this series is intended for statistics, and a math series is already running. So if you want to get more deeper dive into, please put in comments. If there are specific topics in stats you want me to cover, please put it in the comments too. All right. Thank you for listening. Bye-bye.